Hey everybody, this is Jim at SP500chart.com. It's about 4:15 in the afternoon Eastern Daylight Savings Time, and it is March 27th, 2013. We're going to look at the S&P as we do after every day's close, with rare exception. I think maybe I've missed 2 or 3 days in the past year due to travel or some other extenuating circumstance. But anyway, before we move on with it, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I remind you again, I am not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, starting off, we're looking at a 15-minute chart. And wow, it's really interesting what's shaping up here, because clearly we're seeing this line in the low to mid 1560s really presenting a problem for the S&P to get over. And what makes this interesting is a couple of things, one of which, when we had this inverted head and shoulders down here, if we measure that pattern from the point of the breakout, we come up with this green line, and we really have pretty much reached it. So I would call this pattern down here a completed thing, which means if the S&P never gets over 1565, this pattern has done what we would expect it to do. Really, you don't necessarily expect resistance at a minimum target, but it's a minimum target for a reason, and that is there are many times when you get that much out of it and no more. And chartists over the years, decades, centuries have noted that when you have an inverted head and shoulders pattern, there is a strong tendency to make the minimum, but obviously it wouldn't be a measurable event unless that often ended up being all the pattern could set up. And I'm not prepared at this point to say that's where we are. It may be, but I'm not really prepared to say that, because we've got this other pattern that we're looking at that is in this little oval here. And if we can get over that 1565 area with some conviction, then I believe we should be seeing a move into the low 1590s. I don't think, I believe this red line would serve as resistance. We saw back here where the S&P kind of wrapped its way around this line almost like a vine. If you could imagine this being spiraling around this red line, it could not get significantly over it, and for a number of days would not get significantly under it. Now we are significantly under it, but it looks like there's this gravitational pull to the mid 1560s, but once there, sellers take over. So this is certainly an interesting situation. So far, our little downward channel that we developed and really didn't have much time to see this develop, that played out. So far, so good. Once we got over this top line here, we back tested it, and we've stayed above it. Of course, this line is coming down at a fairly decent clip. So the longer we go sideways, the more this line probably just is no longer part of the picture. Just the same way that this blue line right here that we were in coming off the bottom of this inverted head and shoulders pattern, that blue line probably is from now till the end of time. This line probably will never be tagged. It's just way too high, just way out of range, and it's going up at such an aggressive rate that we'll just never see a day where the S&P will catch up with this line now. Now this line could come back. We could come back for another back test. And if we did, I would expect that to produce selling, because that's what a back test of a broken rising channel tends to do. So right now, if we get over 1565, then we're looking for the 1590s. And guys, that could happen without upsetting any of our technical tendencies. It could happen within about 6 to 7 trading days. If we were to get up over this line, then maybe back test it and then wander back up here, we could get into the 1590s, at which point we would be we would have by then set a new S&P all-time high. But you know, when the headlines trumpet that, I just want to remind you, we are looking at this line right here, drawn over the 2000 market top, the 2007 market top, and the question remains, will this turn into the 2013 market top? There are lots of little signals that make me think it certainly could. But the only thing is, it seems like such an obvious thing. Is everybody looking at this chart and thinking the same thing? And what would that mean to the success or failure of that to happen? But let's do this. Let's take a closer look at the past couple of days. I want to show you something that's kind of interesting. The past couple of little rallies that we've seen in the market have been in the shape of little rising wedges. And isn't it funny? I know if you're a new subscriber, and we do have some new subscribers, I've mentioned this in the past, and I'm not saying that this is something you necessarily trade off of, but it is interesting to note that very often when you have a little wedge pattern in a chart, or even a large wedge pattern in a chart, it's interesting how often the apex of that wedge touches on a technically significant line. And I want you to look at this. All of yesterday's trading, we follow the lows right here. We followed the two highs, and we look at the apex. There we are, right at that resistance line. Today's trading, we come down, up, down, up, down, up, down, in a little wedge. Look where that apex is. So, I'm going to stick my neck out. If this little pattern holds true, then maybe a little strength tomorrow, then more selling. That's just what it looks like right now. But, again, we also are looking at this area. It's looking less like an inverted head and shoulders now, and looking more like a triangle. And it would be a triangle with a flat top. It's not a rising wedge. It looks like a triangle with a flat top. And if that is the case, there is, to some degree, there is a predisposition for this kind of pattern to eventually resolve with a bullish move. Because what this means is this: we have people who are selling at the same level. Let's call it 1565 for the sake of simplicity. But we have buyers coming in at progressively higher levels. Eventually, those who are selling at 1565 will, quote, run out of inventory. And when they do, sellers will run out of inventory, and when they do, buyers will have to pay a higher price. And that's why the flat portion of a triangle tends to be on the side of it where the break out, or if it's at the bottom, where the breakdown will occur. So to me, this looks more bullish than bearish. But that doesn't mean we keep our eye off of this bottom line. Because if this bottom line breaks, then we will likely come down and, at least test this rising yellow line, which has a pretty good history to it. You can see it here. I think 2-hour chart. Take it back even further, even though this line moves a little bit, you can see we have a bottom in mid-November, we have the bottom in late December, and then another one in roughly middle of February. So we are looking right now at this whole pattern between this top resistance line and this rising support line. I would say chances are probably, why did I do that? I meant to go to a 30-minute. Chances are probably 60 to 70% that this goes up. And if it does, then we start to look for that low to mid 1590s. Then we just, if and when we get there, we figure it out. Just like if this bottom line breaks and we start to test this line, then we got stuff to consider there too. Again, I mentioned that where we are right now in this market in which the moves are becoming more and more compressed, becoming less and less fruitful to the investor. It's becoming more and more difficult to identify patterns that give us a sizable target. So everything is kind of getting shrunk down. Now, if we end up with a little head and shoulders top here, which we could, then that would give us a sizable downside target. But we don't see that completing yet, and until it does, it's nothing. So guys, that's the video for today. Let's just watch this little area that we've been in right here. There's the resistance, there's the support. Let's see which one of these gives. I believe the odds favor a move to the upside at this point, and that is based upon the flat top, which again signifies that there are sellers up there at a pretty consistent level. Eventually, they're going to run out of shares to sell, and we've seen that this market has had very little problem lately picking up buyers on dips. So that's your video for March 27th, 2013. I want to thank you for watching, and I wish you well in the markets tomorrow.